Good morning, Paul Georgie from Allendale. It's February 15th, 2011. The grain markets this morning expected to open under a little bit of pressure here, down 1 to 2 in the corn, a couple lower in the soybeans, 5 to 7 lower in the wheat. Basically off of profit taking, not much other news around here this morning to talk about. The USDA, however, did release their baseline estimates yesterday, which is based off of information from back in November and December. They put the planted acres in corn at 92 million acres. That's up about 4 million acres from last year, which seems to be a kind of a universal number that we need here to that many acres with an average yield of 162 bushel an acre in order to have an ending stocks situation next year that's improving rather than reducing. The biggest problem that we have when looking at those baseline numbers from yesterday is that the USDA was using a carry-in of 827 million bushel. Right now we've got ending stocks of around 675. So some numbers there that you can't really use a lot of them because they're already outdated. So the question is, how much of a belief do you have that we're going to have 92 million acres of corn? In soybeans, they said they're looking for around 78 million acres of soybeans. That'd be increasing about 600,000 acres. Again, the meetings that I was at out in Iowa last week and the survey of farmers say they're going to plant more soybeans. 40% of the people in the room raised their hand and said we're planting more soybeans this year, simply because of the cost of putting that crop in, and the consistency of yield in soybeans in those areas. So we're going to have to get corn acres from other areas like Illinois, Ohio, Indiana, and those states. So it's going to be critical. It's going to be interesting. I think the next 6 weeks or so here before the USDA planting intentions number at the end of March to give us an idea of how many acres we're going to plant. It's going to be interesting because we definitely will need more corn acres in order to keep our balance sheets in line. Other news, Argentina farmers are having an issue again with the export quotas. They're talking about possible striking again or taking some type of action to slow down the movement of corn in order to draw attention to these export quotas and have them taken away. They say it's definitely an imbalance of an unfair balance for the Argentina farmers. Brazil soybean harvest is getting underway in a much bigger way here. They've got about 10% harvested already, and every day that goes by they increase the soybean harvest, which in turn is putting some pressure on U.S. soybeans. Buyers such as China will be going to South America to make purchases. Their basis has widened enough that makes it advantageous for several dollars a ton right now to go to Brazil and South America and make those purchases. Wheat, seems like we try to kill the wheat every day here, find a reason why the wheat crop in the U.S. is going to be under duress. The warmer temperatures that we've got now in the southern plains and across the southern part of the U.S., traders are talking that up as being bullish, the wheat, because it will bring the wheat out of dormancy, and then it's still too early. There's going to be some more cold weather, and that's going to cause winter kill in the wheat. Those are issues we have every year, and because it is more sensitive this year, the supply is extremely critical. That's going to continue to create volatility in the wheat market as we move forward here, at least for another 3 to 4 weeks. The bottom line in the grains, I think with the profit taking that we've seen, starting yesterday. We've got some support technically underneath the market here around the 695 area in the March wheat, or March corn, the $14 area, 1395 area in the March soybeans are critical support areas. I think if we close below those levels, we could activate a lot more stops and see some more pressure in this market. However, I think if in the corn, somewhere down in that 360 area, 370 area should provide some excellent support as we battle for acres between corn, cotton, soybeans, and wheat going into the spring planting season. In the livestock, cutout values in beef, only 1 cent higher in choice. Select was up 53. That puts the select carcass value at about 55 cents higher than the choice at this point in time. We got a cattle on feed report coming out on Friday. Big number there is the placement numbers. Rich Nelson here at Allendale believes that we could see a 6.2 increase in the placement numbers. That's going to be watched very closely because we've got less cattle to put into the feedlots, but we may have put more in during this January time frame simply because of poor pastures and the outlook for larger cattle prices here down the road. In the hogs, we got higher prices here this morning in the overnight futures. Cutout values are up 68 cents, positive number there. I think looking at the technical aspect of April hogs, we're in a pennant formation there. If we break out one way or the other, we're probably going to see a sharp move in that direction. $94 on the upside, $91 on the downside. If we take out and close below either side there, it could cause some a sharp move in the direction of the breakout. So watch that very closely. Stay in touch with Allendale's research. We'll be happy to answer any questions that you might have. I'm heading to Riverside, Iowa here shortly. Looking forward to see as many of you there as possible. I'll be there this evening and again tomorrow morning at 10 o'clock. So you can call here to get details or just take a look at the website and get all the details for the meeting. We wish everybody a very successful trading day. We'll talk to you tomorrow. Bye-bye.